right, cool. All right, let's get rolling here. So as I was saying, Mitch is usually is a lot better at the sector analysis stuff than I am. I kind of just use his work, but it's so blatant right now since last week that it doesn't take a whole lot of genius to see. This is the intra-week analysis for the sector performance. And you'll see here, the XLE is just boom, head and shoulders above all of this, right? Here's all this other stuff kind of bunched up here. Looks like the XLU is pretty weak. And okay, hold on one second. Sorry, I just have to do something real quick. All right, sorry, just one of the attendees had a problem, so I wanted to make sure I took care of it. So like I was saying, the XLE is very strong. So we'll look at some of the, maybe a couple of energy stocks too that might have potential for reversing it so strong. Now, another thing on a more shorter term basis is look here on the rolling month. Look at all this bunched up here, right? But then look at the weakness in the transports. I also believe that's a bad sign for the markets and the economy when the transports are this weak. Now, wait and see what happens in the only couple of weeks of this, but still, we'll look at both of those for potential plays. The transports on the short side, and then we'll look at the energy sector for potential pullbacks to get long. But I mean, this is just so blatant. I have to look at this. Like, I mean, I couldn't wait to get a glimpse of this. I mean, look at this red. Beautiful. Straight. This is not positive. And, Mitch, we did a coaching call Tuesday night and with some of our subscribers, and Mitch went through just, how we're in a dangerous territory if the market starts to sell off below a trend line, which I'll bring up for you guys in a little bit. We could see some, a sizable correction. And here, let me get rid of the last week's trade, and I'll show you some stuff from last week too. But, you'll see here, this little sell-off that happened. Let me get rid of the controls. Give me 1 second. There we go. And right there was the origin of something, right? It held, came close all along here. And now it still hasn't gone back there. I mean, this could last, right? If I jump this up, this is just a 30-minute chart. So more of a day trading time frame, right? But when I get up to the daily, let me blow it up now. I mean, there's not a whole lot here on the daily chart to hold price up as far as the way we look at price action with like demand and supply. On top of the way Mitch did the trend line the other day, and if we go below the trend line, which I'll draw in a second, we could be in for some pain here. Yeah, I mean, this is not positive.
Yeah, and mind you, I don't know if anyone else heard this statistic. The S&P 500 broke record new highs 53 times this year alone. So with that also being said, with the law of gravity, anything that goes up must come down.
Right. This is the ES daily. Yeah. And I drew the trend line here. And I didn't draw it perfectly here. I mean, I really should have drawn from there. But I'll send you a blog post, Jim, where Mitch kind of goes through this himself. And this is dangerous. We're in for a rude awakening, I think. Mm-hmm. But wait and see. I mean, we trade the market we're given. We don't trade with what we can't do. Yeah, I mean, this is going to be interesting to see what happens, because we're due for a correction. And I think last week I was talking about Mitch about it, that we've only had, I'm not 100% on this, but I think we've had a couple like 3 bad sell-offs in a row, like 3 days bad of it, and then it rockets right back to new highs within a week, sometimes less. I'm not even sure if it's 7 actual official trading days we're at new highs. Now, I mean, we've had a fairly nice set of red days you know, that green, we had that, but I wouldn't call that like just very much an inside day. Yeah, sure can. And then, you know, we did have this, but I mean, this is just intuition a little bit. I had a feeling this was a fake out. Doesn't mean I'm trading on feel. It just means, you know, just intuition of doing this for a long time. So now here we are. And if we take out this demand zone that's been tested already and the trend line, look out below. Right? You know, yeah. And David, what were you looking at on the NASDAQ? Why I bring up that blog post for one of the attendees?
Yeah, so the NASDAQ I was looking at had an amazing drop this morning. And let me pull up my chart. 1 second here.
Do you have permission to share screens? You should, but
1 second. Let me pull up the chart first.
And Carolyn wants to look at Mara again. You're very obsessed, aren't you? You might be right on that 40 as 41.75 is fair value. In the blog post, Mitch does the actual calculation for a 10% correction, so you might be right. Let me know when you're ready, David, and I got some other stuff we can talk about too in the meantime if you want.
Yeah, it seems like my connection is fairly slow right now, but okay. So just, you know, I don't want to mess up the Zoom. just verbally, there was a trend line break. So I just used the trend line break situation, and it broke under our moving average that that I have set up. So it broke right below 1548.6, and then it just kept falling like just a whole knife, and it was just dropping. It dropped dramatically. I was on a 15-minute chart, by the way. So
15 minutes. I
yeah,
hold it for a long time.
Yeah. Oh no. This was an in and out situation. So I traded the futures pre-market beforehand. So that was the situation where I got in. I got in around I want to say 8 o'clock. It was just nothing to hold it up. So I was just like, oh wow. I got into it, made a nice sizable tick size, and then took my profits and ran.
I'm taking my choice and I'm going home.
Yes, exactly.
So wait, and you know, it's funny looking at this on the daily because I don't know if I told you this, but I don't NASDAQ futures because I never made money trading them. So at one point I got smart enough and I mean that not I never made money, I just never made money consistently the way I have with Dow and the S&P. So I stopped and I stopped looking at it. I don't know why. It's just like some of it's just like you know, habit and stuff of like pulling the trigger on stuff that's not working. But here, you know, you'll see here this
zone,
right, looks pretty good. Now it touched, it's held, right, and even, you know, got you like
that's exactly where I got out. That touch is where I got out at.
Oh, that was right. Oh, great.
Yeah. So that's how, and that was again using our system, our demand zone and our supply zones. That's how I figured out this was a valuable target, and I decided to leave the trade there.
Cool, because it's number one, it's a good exit, but you'll see it's held nicely, right? Like it touched, didn't do much, right? Got you like I said, 1.5. I could get the actual numbers, but touched again, held, and still holding, right? Like it looks just ticked there this morning, and it's held. So this will be interesting if today, which is Thursday, right? So we have 2 more days of trading ahead of us, right? If this holds, right? Because if this doesn't hold and we get a trend line break, I mean, same deal as the S&P. On the NASDAQ, there's no fresh demand on the daily chart, which is the king, right? Until you get down into these 2 regions here. So again, still in correction territory.
Yeah. And then also we got to remember that the actual future contracts is about to be expiring as well. So that that rollover is about to happen. So
Mhm.
it most likely probably that level won't hold after the rollover happens.
Yeah, and there's usually some kind of gap. It could go either way. You're right, or excuse me, it could go down, but it could go,
And yeah, it can
roll.
shoot it up right away as well. So like
Yeah,
it's most likely
I
that
prefer
I
not to
think
be.
that's what's gonna happen.
It's interesting because I had talked to someone about Apple. The chart looks, not dissimilar,
Yeah.
right? And I was looking here, and I don't know when this. Oh, I think it was on Tuesday's coaching call, David,
Hmm.
and we were setting up calls and puts, and I was looking here
I
for
still
some.
have this zone set up. Like I'm
Yeah.
waiting to see if this is gonna hold. I'm waiting for the
Mhm.
confirmation entry.
Uh,
So I'm waiting to see if this is gonna hold or not, and then pull back up.
this does not,
If it does, I'm looking at
right?
those 148 calls.
Because right in here, it came to the back of it, held, ticked through it, and now,
Hmm.
yeah, this if this were to turn around, I mean, it'll probably be like Fed manipulation is what I would say is going to work. But like, oh, we're going to do this, we're going to do that. But more than likely, I think this same deal as the Nasdaq, which is probably the biggest stock on.
Yeah.
Get rid of
Disclaimer: this is for educational purposes only.
that. Please, on my side too. I'll put up the disclaimer in the video. But like, look out below here, right? They're like, this is all just like this muffled mess of
Yeah.
crap, right?
Like I'm looking at the 136 and then also the 133. That would be like if you're looking into holding Apple long term meaning 5 years plus, that would be a perfect area to definitely try to look to invest in.
Are you a financial advisor, David?
I am not a financial advisor. This is for entertainment purposes only.
I mean, and it's funny because everyone one of my mentors was always like a big proponent on like following the stocks that make up the exchanges,
Mhm.
and it's funny that these zones look almost identical to what
Yeah,
it looked like on the Nasdaq futures.
yeah. It's one of the heaviest hitters, right? $1 trillion company, right?
Mm-hmm.
And I still think Apple is underrated. Is $1 trillion company is still trading at the 144s versus Amazon, Tesla,
Still
Google.
trading.
Yeah,
And they sell real products and make real money.
yeah, yeah.
And profits. Neither of them, I don't know if really made a profit. And
I
Amazon
I heard of the craziest statistic ever. So the Apple's bond portfolio, their like bond portfolio in their balance sheet is actually worth more than a lot of companies that's
I believe.
out. So it's worth more than Snapchat, Uber, um, and then something else. I forgot what else it was. I think Zoom. Yeah.
It's funny because they when a company has that much cash on their balance sheet, like I don't know if it's 100 billion or a trillion at this point,
Mm-hmm.
but let's just say like Google, Apple, who else has cash? Microsoft, like those three companies, they can't just hold cash in a bank, right?
Yeah.
So they convert some of it to bonds or maybe even commodities, I would imagine, just
Mm-hmm.
to keep it safe.
Yeah. And just that's just on like a more of a sider note, is like when companies like that have large amount of cash on hand, there's going to be an interesting change of events coming soon, and which they already announced as well. They're gonna be getting into the electrical vehicle market. So
Yeah, curious
that's
if they
gonna be
go.
amazing.
Aaron, yeah, these are this is Apple, but like I said, Nasdaq's going to look similar, if not the same, right? Is that we're waiting for this area, this 140, 148.50 to 146.70. We're waiting for this to break, which I imagine it's going to, but I wouldn't put money on it, right?
Mm-hmm.
Once it does break, I would imagine the only place I would feel comfortable getting long would be down into this area, that 137, 133 area.
Yeah.
And this is just analysis. I would have, there's more to it than just setting up a trade. I would have to wait for the arrival and, what does it look like on its way down? But these are the next two potential areas where I would feel comfortable, potentially buying calls, selling puts, or just buying the stock. Now, if I go back to the NQ, like I said, they don't look that different.
I think you could do a comparison on one sheet. So right where you type in the symbol and you see day, and then right over to the right where you see compare. Let me see if I annotations.
So here's the NASDAQ. If you wanted, David, you could definitely I'll turn the keys over to you. This looks a little bit further down actually than Apple. I mean, if this breaks, nothing. There are those two areas in the NASDAQ futures. I'm just gonna draw it as one. Like right in here is where I would look for potential. I don't love them, but on Apple, those levels look pretty good. Jim, I'm sorry, I saw you put a message, but I didn't get a chance to read it. Let's see. Can you draw the fib tracement to the check for entry levels on S&P? I bet they line up, put it that way, with at least the 78.88.6, and then depending on how you draw it, I just draw them around the levels that I use, and then take it from there. David, were you going to say something?
No. I was trying to let you know to compare both the NASDAQ and Apple right on top of each other. Right where you able to change the chart interval time. It says compare to the right of it. Move out of this. Close this out. It says compare to the right of it.
Oh, okay.
And then you could type in Apple. And then it should lay it right on top. There you go. Boom.
Can I change that to a candle, or is it the line? I mean, that's fine actually.
Yeah.
Oh, that's cool.
So yeah, the Apple and NASDAQ move almost identical.
Look at that, because even that, I don't even need to change it, right? Because that little dip right there, lining up with that means those Apple levels line up too.
Yep.
Wow. Let's see what happens. Going to be an interesting market. Just take that off. All right. So what else are you working on now, David? What else did you want to talk about? What problem are you arising with, either trading futures or options or stock, whatever you're doing?
I think mainly is options. I'm trying to get a better handle on my options trading, right? So, trading shares is more easier to understand because there's not so many different variables. So I do need help with like understanding how can we use the same information that we just did on like the Apple analysis, and how can we transform it into an option trade? Because like we just talked about, Apple is trading at $147. If I wanted to get 100 shares of that, I need a fairly large capital size.
Great question. So a lot of ways to handle it. I'm not going to talk about this level here because it's already broken theoretically, and I expect it to hold. So let's just say we get entry on this, and this is just a scenario, right? Not like saying this is going to happen. The stock could turn around on Monday and never come near here. But let's say we get down closer into this area. Let's say we get something like this, right? Where price is coming down here.
To the right, yeah.
So let's say we get a drop into this area, right? And we're maybe not quite as we have a decision to make right around that 140, 141 area. If price here. A couple ways we can handle it, right? Now, if you're really trading with a smaller account, easiest thing, can you do it also? Yeah. The easiest thing to do is it's not a tool for every situation, but the way I look at it and Mitch looks at it is the easiest thing to do is buy some calls. right? Now,
Okay.
where people get really screwed up with this and they fail at it is they get super cheap, right? So to give you like a behind the scenes look at the way we do it is that you don't want the cheapest option because the trade could work out. And if you're using, let's just say next week's expiration to get like the cheapest possible option, this thing could turn around right from your entry point and you can still lose money. So the way we do it is that Mitch, and I have to give Mitch more of the credit, I really don't have a hand in it, is that Mitch will buy a little bit more time out and pay a little bit more. So like when we trades out to our subscribers and so on, he'll buy a little bit more time. So then you take that out of the equation and then you're just trading price, just like you're trading a stock, right? So if we're doing this one, I don't want to get into all the details, but let's just say we bought between the 137 and with Apple, they have dollar increments. It's not like some other stocks that only have quarter increments, like every 250. So if we were going to buy the 137 call or the 135 call, let's just say somewhere in that region there, right? And let's say we expected a bounce into 142, which is a nice trade. That's a $6 move from 137, right?
Yeah.
All right. And on a stock, that would be about $600 of profit. So on an option, let's just say we made about half that. But let's just say you paid $900 for the calls, right? You use $100 of buying power, right? So you have to buy one contract as 100 shares. So let's say you took $900 of buying power, right? But then if you got out at 142 and you made $300, those options now worth 12, right? That's a return on investment. That's not quite 40%, but like 35% return on your money. And our average holding time for calls and puts right now is hovering around a week, right? So it's not a day. Some trades we close out in a day. It's really nice when that happens. Let's just say on average, we hold something for a week. So for a week of tying up $900 of buying power, you make $300. Not too shabby.
So you're saying that with options, I could theoretically, you're saying that I could control 100 Apple shares for $900 versus the 1,400, well, the 14,000.
Correct. Yeah. So that's the easier way. And it's simple.
Okay.
Now you have to make sure you're not getting towards expiration, right? Which is fine because I just said we start there, right? So if you buy out more than 30 days, and our average holding time is like 7 days, you've got no problem there. Now, of course, you could lose money like anything else, but the great thing about the way we trade, about using so basically the way this works is once we find these key levels, right, we'll put a right below it. Well, you know that part, right? So let's just say I had a stop in this case at 135, right? Now, not quite $2 wide. Well, I'm only going to take like $100 loss on the calls also. So not too shabby. Risk 100 and make 300. Give me that trade all day long. And it might even be less. I mean, it's not a perfect. The math isn't perfect, but to do that again, think of the same thing using that $900 of buying power. Yeah, you lose 100, you still have 800, right? And on the positive side, if your 900 becomes 1,200, that's a nice trade. Do one of those a week. Win half of them and you're still in good shape.
You make this sound a little bit too easy.
Well, do the math, right? So let's say you did one a week and you lose half. So 300, 2 weeks, made $600. And then you lose on two, and let's say you lose 200, right? Still ahead $400. And you're still using the same $1,000 of buying power.
Wow. So it seems like somebody has a company for us to look up, DOCU.
All right, I'll look at that.
Can we see if we're going to put an option trade together?
Have 5,000. Well, all of a sudden this becomes a lot easier. I mean, our average student's trading within a couple of $1,000 range, not so much in like the lower like 1,000, but it gives you a lot of flexibility and a lot of easy ways to use options for it. What was the symbol, David, you were saying?
DOCU. And let's see if we could put it something. Oh, look, you already charting this up, DocuSign.
Yeah. Last week we talked about this too. It's probably the same person. And I found this, which I don't know if this was something we found live or just something I was doing for analysis, which ticked in there. And then if this could have been last week, right? Because too many candles. Yeah. Boom. Right. And then I charted this as a potential level. I mean, this is strong. I mean, it didn't even come down here, and some red here. And this is fighting the market is really what this is. Let me see. Let me just look at the chat and see if he had a comment about Docu or else Docu. I am thinking a bearish trade down to the 250 level. Who said that? Jim. Okay. Bearish trade to 250. I mean, it gives you $23. So, I mean, just to be clear, the way I'm looking at it now, if this holds, and again, education purposes only, I do have that 254 area as a potential bounce. So if you're trying to get like every dollar out of it, be a little bit careful. Now, most trades don't just touch the front and then immediately turn around. So this, you know, a bunch of them do, but let's just say it gets to 254, then bounces, that's great. Well, it'll be great for me, but if you're short down to 250 and you don't get out at like the 250 level, 254, you could see your entire trade go to crap over just, you know, a couple bucks, which I've done any number of times. I'm sure David has too, right? Because if you're getting out at exactly 250, you would have to drill into the level. Now, if you're completely short bias, then that's your business. But that's just the way I look at it. We're down here, and we got some time to react there.
So, if just for pure example, is it possible you could open up an option platform so we can see how it'll look to actually execute this trade?
I could. I think it's better off if I just use if I just use the charting platform, because I'm using my laptop right now and not my rig, so I don't want to explode Zoom. Last I had Mitch with me, but just since it's just me, I don't want anything to explode. But if you would look at, David, if you have your options platform up and you would look around let's just say the 245 calls, and let's say like a month or two out, and tell me what they're priced at, they're probably ridiculously expensive. Oh wait, I'm only going to do the long. I don't want to do the short because it's too much gas. Just say you get short here. Even if you waited till it broke below this previous low here, that 265, that trade starts to not look that great because you got to kind of use math to get out of your stop as opposed to excuse me. You have to use math to determine your stop out as opposed to using like the breakable level. I really prefer just always on the other side of my level, you know, within a certain range. I want to put my stop there. So it's a little too much guessing for my purposes. But if you were short, you know, you're not wrong. I mean, your thesis is still holding depending on how we close today. And then a short down the 250 doesn't look bad. I would just be a little bit cautious about this. This is a nice level. I really like it. You know, is it going to hold? I have no idea. But the way I look at it is I would be willing to get long in here. So I wouldn't hold until exactly and try and get every dollar out of it. Let me check the chat out.
And then, so I think I'm gonna still need a little bit more help probably later on. How is it that I can set up a one-on-one call with you probably a little bit later?
Yeah, that's fine. I'll send you an email with my calendar link, and
all right, cool.
We'll figure it out from there. But yeah, I can help you with that. So it reversed at the 38.2. Oh, so it reversed right from here from the 38.2. Where were you taking the swing from? From the top here or Jim?
Oh, he's using fib levels.
I guess so.
All right.
There we go. From 179 to low. Oh, okay, got it.
Yeah.
Right there. Yeah. Not my favorite way to trade just because of this holding. But right now, I mean, if you got in around 261, 275, I like it. Nothing wrong with it. Nothing wrong with it. Not a bad trade. Not a bad trade. All right, cool. So does that answer your question a little bit, David? And then we can talk more about it, like setting it up and what platform do you use?
I'm currently using E-Trade.
Okay, that's fine. Yeah. I mean, kind of the same. Getting a call from a mutual friend. Call him back in a little bit. Cool. So I hope this answers your question. Oh, I told Karen. So Carolyn, I'm going to look at Mara now, and then I will look at, I'm going to show you a trade Mitch and I were looking at yesterday. I mean, so if you're selling premium, Carolyn, which I think that's what you were doing, you're kind of in like the best situation. David, she's selling options, which you know a little bit about, right? Cover calls,
Yeah.
like that, right? So she's in one of the better situations.
Where did she sell this put at?
I think she did. I think she did an iron condor. Carolyn, you throw the details in the chat for me. You told me the other day when I spoke to you, but I can't remember what you were doing and what the
she must be a professional. Iron condors.
Yeah, I mean, she knows that she's. Do you scan to find your tickers? Sure do, Aaron. Yeah. I have to give again. I don't do the scanning. I have a watch list that I use regularly for trades I do consistently. But Mitch does all the screening and uses a bunch of different criteria depending on what we're looking for, right? So if we're focused on selling premium, right, Mitch has a scan for that. If we're looking to buy, Mitch has a scan for that. We do something for a couple of our students called we're looking for cheap stocks. So those are stocks between $5 and $25. He has a scan for that. Mitch is just like a whiz at some of the technical part of it and does like just great work that I can't duplicate. But yeah, he usually scans to find the tickers and especially the stuff we give our students. All right, she's not answering about what she did and like what her strikes were. She told me, I just can't remember. And if she's got, depending on when she sold her premium for, and it doesn't really make too much of a difference depending on your outlook, right? Where she's kind of sitting in the middle. And I think I spoke to her earlier this week. And I have outlined basically a demand zone and a supply zone. She's right in the middle.
Wow.
And that's usually when you're doing an iron condor or whatever kind of spread you're doing and nothing's happening and just time is passing. That's a good scenario where you're just trying to get to expiration. We still, even when we sell premium, we still focus on price and use that to our great advantage. But if you're focused on time, whether you're selling this week or next week's, right now she's in a good position as long as she's not like too close to this, like in the 34. But if she got okay premium around the 38 region and 44, I don't think it was this wide. I also wouldn't expect you to get great premium under these circumstances. But right now, I mean, can we have Mitch do a class on how scanning for possible trade ideas? Yeah, I will talk to Jim. I'm just remembering, I sent you an email and it bounced back to me. Would you do me a favor and DM me your email address? I remember now. I sent you. I was trying to send you the recording last week, and it came back as it didn't work. And I don't know if it was me or you, but if put DM me in the chat if you don't want everyone to have your email address, and that way I can send you. I'll send you a video too that Mitch we have of Mitch scanning, and I'll ask him if maybe next time he'll show a couple of his scans next week, because we're gonna do 2 or 3 more. All right, cool. Thanks, Jim. We're gonna do 2 or 3 more of these roundtables, and I'm thinking of doing next week, maybe doing a more options intensive one, David, and so you'll love that. And then a more future intense one, and then maybe like a last topic for the last one. But a little bit more focused as opposed to just looking at levels and stuff like that. I wanted everyone who does come regularly to see how we trade levels and how it's I wanted to also see consistently, because I do notice a lot of people, and David, you might see this when you look at things too, or when you're a little more active on social media than I am, right? Everyone's always got the trade afterwards, right? So look, I traded this, the left side of the chart, right? And it gets to people is that like we're predicting this and then resting on what we put out there, right? So we're doing the before and the after. We're not just saying, oh, this happened and we did this. we're always trying to make sure we're, ethical and showing what worked and what didn't work. And when we get a stop out, on the today's coaching call, Mitch was showing a slam down we got on Twitter on a trade we put out. But you're going to lose on a certain number of trades, right? So it's just not. It's not always about how much you win. Sometimes it's also about keeping your losses small. So
yeah, that risk management feature is super important. That's one thing I learned. The top hedge funds, their criteria for their stop loss is that you can't lose more than 1.6% of the total account.
Who said this?
A lot of the hedge funds. That's their rule. If you lose more than 1.6 of your account, then you're on good leave. You won't be working anymore.
Because some of the hedge funds that we've dealt with, they're willing to take some beatings on position, and I think it just depends on they have a trading desk and then some of the longer term stuff. Mitch did some analysis for one on some of their farmer stocks and was doing some collars, and I was like, that's a lot of pain if you didn't do the collars on them, and they're prepared for it, which is interesting you said that, because a lot of our students, you went through boot camp, for this stuff, is that we keep risk about right around 1%, and really as high as 2%. And then, if anyone wants to go above that, it's really not our place to tell you what to do once you're comfortable. But on average,
purposes only.
What'd you say?
I said entertainment purposes only. I'm not a financial advisor.
Yeah, not financial advice. David, you give But yeah, if you're listening or watching the video, Carolyn, Marin is doing nothing. Hopefully that's good for your trade. I remember you selling something. I'm sorry, I can't remember if you were selling both a two-legged option or more even. I don't remember. But I'm pretty sure it wasn't this close to current price, because this is Monday, Tuesday, Wednesday, Thursday. So there's Monday, and I don't remember you saying you being near your strike or anything like that. So these are pretty good, as long as depending on how far out you go and time and stuff. This is what I think of Merit. The last thing I was going to look at was Mitch sent me a trade on AIG. He was looking right. He even has the daily lower Bollinger Band on here. I love when he has the daily Bollinger Bands on a 2-hour chart. That's so good. I gotta learn how to do that in Thinkorswim. I had to do it in TradeStation. Okay, so he's looking right there.
Yeah, I see it.
Might see today. We're looking at a reversal back to the upside. Sure. Hold on one second. Let's look at AIG. This is his first key level that he was looking at. I wouldn't be shocked if we see this today. And then if you want pretty level.
Yeah, I was looking at that one too. That's really nice.
I like the gap and I like the move up. But that's the thing there.
That's really nice.
Right around that 52.
52.
52 area. Very nice. But we'll see. And then, all right, the last thing we'll look at is for. Oh, wow. Gave up all. I haven't been tracking for it, but.
Yeah, it's giving back all that good money.
Oh, man. It took so long to move up into the, did it get to the 20s? I'm not even sure what the previous.
I can't remember if it got to 20s. I think that was the high.
Because I always waited for, once they survived 2008 and 16 was the high. Okay. but they just never could be, even GM is in like the 30s or whatever. And 16 is as high as it got. I mean, you know how many people probably bought at 16 thinking it's on its way to 20. And now, wow, gave up all of that, not all of it, but a good portion of it. And you're thinking a rally. Okay,
I actually
so
got out around 14 on that.
did you really?
Yeah.
So right there, that touched and held. Let me tighten this up a little bit. Okay. So complete opinion here. This could be a potential problem. This could be an issue on top of just the broad market. 1340, 1350. That being said, it's not very wide, so it could touch, come down, and then next time it makes its return here, then break through. And then once it got 1360, now I'm giving you just like a for instance, but this cluster here could be the next problem. Yeah, I'm not exactly, what's your criteria to do this? Same level. What's my criteria? Send me your email address, Jim, like I asked you to, or if you did already, I'm sorry, I didn't look at the any DMs. And I will send you some stuff on my criteria, what to look at. I don't want to give too much today, but as we go on, I'm really looking for a big move or a side move, so we can have a conversation about that. But yeah, I think this is going to be a potential problem for the long side on top of just the market. If the broad market's, it's holding right now with the market, selling off. It didn't go red today, but that's not exactly.
It's kind of trading in a range, so
yeah.
It's looking to make a move somewhere.
It's this sell off here,
Yeah.
But does that make me want to buy it? Not so much. And then I'm not a big fan of these kind of trade. All right, let me not say what I was going to say because it's going to get too in the weeds. And then after that, there's really not much like areas to buy until down around like the 10 area. I'd be willing to be a buyer on the daily chart. If I drop this down on a 2-hour, there's going to be some stuff to look at. But if I'm looking for a big reversal and I'm looking for something that could go the distance, I'd be looking to be a buyer right around the 10 area. And in the short term, it has to get through that 13 area to get back up into the 16 price level. So you got some. All right, I'm going to go ahead and do it anyway. I said I wasn't going to, so I'm just doing the 2-hour. All right, what I was going to say, I was looking in here, but I still, I think you're just in a battle here until it gets through here. Yeah, so if it gets 1350 or 1340, 1360 area, it should, keep going. But I'm not a fan of getting long of this until funny enough, until it drops more. I'm not looking to buy it. So that's just my criteria on Ford. I mean, it's a $13 stock. If you have a really good outlook on it, I drive a Ford, if that means anything, which it doesn't. I have 3 car seats in the back. That's why. But other than that, I think this is a potential point where your trade's going to struggle. But
what about SpaceX?
What's the symbol?
SPCE.
SP what?
SPCE. CE.
CE. Okay, I remember now. Wow. Oh my gosh. I guess they didn't like that first trip into orbit. Right? I mean, look at this. 50 in the 50s was at 62.88, most recent. Oh my God, now it's down to 24. How is Richard going to put more rockets in the into the Earth's atmosphere. All right, so where we are now, I mean, it's kind of, to get along, it would have to drag through all this like just mess here.
Yeah.
More, if you are looking at long, I do like right there. I have some problems with it, which I won't get into here. David will talk about these, but like right there, that origin of this gap, and then from that gap, basically rocketed out of there. So I could potentially look at something in here that I like right around the 20. All right, let's just say 21. Wow, 21 to 1850 or so.
Shit, that's a large zone.
Yeah. So I mean, and the problem is it's sitting right here at 24. Even if we get a drop into 21, it's not a lot of reward there for the risk you're taking. So yeah, I'm not looking at this as anything I want to be trading right now. I'm not going to talk long term, you know, because it's not the game I play really for income purposes. But I could shave some risk off of that, but it's not going to make it a better trade. It's going to make it a more difficult trade.
Yeah.
So not for me. Okay. Jim, you put some stuff in here. All right, I'm probably not going to get to all of these, Jim, but if you want to have a conversation, I'm happy to talk about any of them.
Can you drop your calendar link in the chat, Ryan?
Give me 1 second. I did not leave. I'm still here. Just grab the calendar link. So otherwise, I'm going to forget to give it to everybody, and I'm more importantly going to, in case some of you don't respond to email. Aaron, yes, I do. We can talk about that privately, but I think Dave, actually, I could take 2 minutes. David, if you took the boot camp on how to draw this, and now you're interested in options, but would you give a quick summary of stuff that you got out of the boot camp that taught you how to draw these levels? And then, because Aaron's asking about my program, which is really just, it's the boot camp on top of some of the stuff we do with options. But if you would do a 2 minute, it doesn't even have to be a commercial, just like, you know, give your thoughts.
Yeah,
and if they're give those too.
Yeah, so for me, I took the way I landed into the idea of taking the boot camp was that I was trying to take a boot camp course with Rich Dad Poor Dad. Robert Kiyosaki is
okay. You can say it.
He's a good individual, but anyway, the course that he had available to learn how to trade was almost 17 grand. And I currently didn't have that stash away in my Acorn. So I met Ryan and Mitch, and they had a more in-depth boot camp course available. So it was a three-day course, intensive course, and it came with a lot of ledger information, and then so paper information. But also the great thing about it for me was that they had videos as well. So I'm more of a visual learner than a reader. So the videos helped a lot for me. And then also with the one-on-ones that they provided throughout the time of the boot camp helped a lot. So for me, having the visual learning and then just having access to the person, like I guess the mentor, would be a better analogy. So having access to the mentor was like very helpful for me. So Ryan was able to get to my questions, my calls, my emails. I was annoying the shit out of him, basically. And he was willing to help me. So the boot camp was amazing. From the boot camp, I was able to start making profit within, I want to say 6 weeks time. And that's just also because of my dedication and time that I put into it. that I was willing to take advantage of. I personally had to. I was at a place where it was basically sink or swim. So I had to put in the time. I had to put in the work and really get it off the ground. So with that hunger and the videos and me bothering Ryan and Mitch, it was a worthwhile experience. I'm gonna say that.
It also helps when I think when I just had right from you. You had a little baby too, actually. So, you know.
Yeah. That was a part of the sink or swim.
And in the rich, when you were going to do, if you don't mind me saying it, when you were going to do the Rich Dad Poor Dad class, wasn't it wasn't it like just like 4 Skypes with like a mentor like in a year or something like that? Like
within a year's time. This is 12 months, by the way. This is a year's time. 12 months. I was gonna have access to be able to ask my mentor face-to-face questions 4 times out of the year. So basically once a quarter, like as an earnings report. So I didn't think that was beneficial to the fact that I just paid $17,000 for that. If I was going to pay $17,000 for that course, so yeah, I suggest if anybody who's not in the boot camp or has not taken the boot camp to definitely take it. Only if you're really dedicated. Again, I was in a place where it was sink or swim for me. So I had to get this down pat, and it changed my life.
That's a cool endorsement. I'll take that. Thank you. Appreciate that. Yeah, I've heard worse things about me. Kind words, thanks. So folks, we're getting on at 11:30. And I have to dip out. I'm sorry I couldn't, Jim. I looked here. Put it this way: there's nothing here in the short term. So if you schedule a call with me on my calendar link, I will review the symbols with you. At no problem. I'll tell you about the program, but I'll also. All right. Thank you. Okay. I was just reading your message, so it's no big deal. So if you schedule time with me on my calendar, I'll review the symbols that you put in there with you on the call. Like I'll tell you about the program, but it's not, I'll look at the symbols with you first. And but on this one, I don't see anything in the short term that's got me excited to go long or short. So sorry, we got to end on that note. But I dropped my calendar link. I got Jim's email. Aaron, you're welcome to use my calendar link also. Oh, cool. And yeah, that's it. David, I hope I answered some of your like beginner questions on options. I'm glad you got time now instead of using any coaching time or anything like that. And then we'll talk privately about options and like what goes into them and stuff. Grab some of my calendar link. I mean, you have my calendar link.
Yeah. I just put in the request for Friday.
All right.
So listen, guys, take advantage of that calendar link. Take advantage of it.
All right, cool. So let's end it there.
He answers. He answers.
And it's me. I talked to someone recently like, oh, I thought like a salesperson was going to come on the phone. I was like, what? What do they know? What does anyone, how hard it is to teach trading? How do you tell someone like, anyway, all right, I'm going to go off on a tangent. Anyway, let me stop sharing. Let's end it there. And I will get a replay out to you guys probably tonight. And I put that blog post in the chat. So I hope you grab that if you want to see Mitch's trend line. I'll put that in the email also. And I will talk to everybody soon. And I hope to have some one-on-one conversation with you guys soon also. Take care, everybody. David, have a great rest of the day, and I'll talk to you tomorrow.
Yes, correct.
All right, awesome. All right,
All right.
good. Buddy, take care. You're very
Bye.
welcome. All right, take care. Thank you. Bye. Stop.